All right, let's go ahead and dive in. Welcome to our tariff and trade briefing this Friday morning, the 17th of October. My name is Michelle Conley. I am the Senior Director of Partnerships at World Trade Center Utah, and we're so glad to have you all joining us today. I don't know if it's a crazy day for all of you. Ben Collender and I were just chatting. Both of our kids are on fall break. And we're hoping no one barges in, and I imagine a lot of you might be in the same situation. So thanks for rolling with us this time of year. Really excited about today's webinar. Of course, you'll hear from Ben and all of his incredible expertise on tariffs that I swear he's looking at the updates hourly. And then I'm also really excited about our guest speaker today. Liam Wyness is with JP Morgan Chase, and he's the Executive Director of Trade Finance there. I've had the opportunity to hear from Liam a number of times over the past few years with different events that we've done with JP Morgan, who's a really great partner of ours. And I leave every conversation or briefing from him feeling like I've just learned really great insights, and his expertise is really really impressive and helpful looking at tariffs and at economic prospects. So really excited to hear from him today, and as always, feel free to jump in with questions both with Ben and with Liam. The webinar is being recorded, and you can see this webinar and our past ones on our YouTube page, which we'll put in the chat. And of course, you can check out our tariff dashboard, which we'll also put that link in the chat as well for daily updates of what's been going on with tariffs. So Ben, I'll let you go ahead and run with what's been going on this past week in tariffs.
Yeah, thanks, Michelle. Share my screen here. All right, so as we do every week, just highlight our dashboard here really quickly. For those of you who are joining us for the first time, you'll want to go to wtcutah.com/tariffs if you want to follow along on your own or browse along on the tariff page. We keep up-to-date, real-time tariff information here that we're tracking. I'm going to go through a few of them that have just been updates for this week. The first is not a tariff, so to speak, but a port fee. So this is one that we've been tracking for some time through USTR. It's a 301 that is essentially looking at goods being carried by vessels or owners and operators of Chinese built ships and goods being built just in general on foreign carriers. So there are a bunch of different breakdowns of what the fees are for these. So you won't experience this, so to speak, as an importer when you're looking at a good coming in, but rather the carriers will be experiencing these. So this is a link to the document that's on our dashboard that just gives a full outline of what those fees are and when you can expect them, and how, if you are a vessel operator, how to basically register and make sure that you're charged the fees appropriately. So another big one this week is the 232 on lumber. So the fees went into effect on October 14th, and we went through this in a previous webinar. We can go back through, but basically 50% on tariff, 50% tariff on kitchen cabinets, and 30 on upholstered, not unholstered, upholstered. So we'll get that changed. Furniture. And then the last thing that I'm going to update on is just an update on the China tariff. So we've had a lot of back and forth. There's a lot of discussion out there. Currently, just as a reminder, we are sitting around a 30% tariff, depending on what you're importing. If no 301s or 232s are applicable, you're sitting at about 30% for IEEPA tariffs. But there was an announcement that on or around November 1st, that this tariff will go up to 100%. And so another thing that sort of coincides with this timing of the tariff is the summit between China and the United States, which is taking place October 31st to November 1st. So this may be positioning on this, but we just saw this morning and yesterday some additional comments about, 100% isn't sustainable, but we're prepared to do this as the United States. And so just something to continue to monitor. It may be positioning, but it may really come into effect. So there's a lot of uncertainty there in that November 1st timeline will be something to keep an eye out for in that summit and what comes from those discussions. So, and the last thing, I'll stop sharing my screen and just provide some quick updates on the one second here, on the timelines coming up, as I have been the last few weeks. There are a lot of significant milestones ahead of us. The first is the 232s we talked about last week on industrial machinery and some medical devices and personal protective equipment. That public comment closes today. So if you are involved in those industries, you want to be submitting public comment. And as a reminder, this public comment is important because if you want to have legal recourse down the road, the federal government has to take every comment, substantive comment seriously in their process. So if you want to go back and have some sort of a legal recourse to say you provided public comment down the road, and it wasn't taken seriously, you need to submit public comment. So there's also public comment open on the trade estimate report. So this is open until October 30th. This is the trade barriers report that came out last year that resulted in the reciprocal tariff. So this is something that USTR is putting out for public comment again for next year. And this may decide how we're looking at some of those IEEPA tariffs or whatever they look like after these Supreme Court cases, which we'll go over in a second. We talked about China. USMCA has open public comment, so this deal is going to be renegotiated again next year. That public comment is open until November 3rd. And then there's an auto inclusion process that has some public comment as well that is open until November 3rd. And finally, the last thing to update on is that the Supreme Court has oral argument set for the IEEPA cases slated for November 5th. So this is an important timeline because this is where the Supreme Court's really going to step in and say whether these are legal or not. And this is the first stage in that where the Supreme Court hears oral argument on the matter. So a big set of milestones coming up over the next few weeks and something to keep an eye on and monitor and provide public comment as it affects your business. And with that, I will conclude. So thank you.
Thanks so much, Ben. On that port fee, is that only applicable to vessel operators, like companies that have products on, Chinese or foreign-owned vessels don't need to worry about that? It's just the operator?
That's right. It's just the operators of the vessels who will see those fees. So if you're a business importing a good, you may experience some sort of a pass-through cost, potentially, depending on how the carrier is going to charge that. But that is not something that businesses need to track unless you're in the realm of logistics. So,
got it. Okay, thank you. Thanks for breaking this down the way that you do. I know it's helpful for me. I'm sure it is for everyone else as well. I've been wanting to remodel my kitchen, but with the new tariffs on kitchen cabinets, might need to push that down the road. It looks like we do have one question asking for the latest with India.
Yeah, maybe I'll look into that. But the latest I've heard still is that we still have the 25% in place for, the purchasing of Russian oil. And so I have heard a little bit of chatter back and forth that the administration would like to see India stop purchasing Russian oil. And maybe that's making progress. But in terms of the current update on the tariff itself, as far as we're aware, everything I've seen says it's still in place, but I could do some double checking. And it's going to be dependent on India moving their purchasing from Russian oil. And I haven't seen any of that yet, just some interest in maybe looking into it, but no clear definitive action as of yet. We did see something that said by November from an Indian official a few weeks ago, by November, you'll probably see this taken off. And that sort of, I would say, is a signal that India is willing to do it, but just hasn't done it or taken any action yet.
Got it. Looks like we have people also interested in what's going
Oh
on with
yeah,
Switzerland and
a
Brazil.
lot of questions.
Talk
Yeah.
about Switzerland this week. Feel free to dive in, Ben, or if you want to kind of work on this with Liam. Either way.
Yeah, yeah. These are all similar in that Brazil still has their tariff. It's ongoing negotiations. Switzerland has a 39% tariff right now on IEPA. So that is something that's still in place. So in terms of monitoring the ongoing negotiations, I haven't heard what those are like. We hear it oftentimes when the public announcements come of, you know, Switzerland struck a deal. Great. We'll update our dashboard. But in terms of insider information on where these are going, we don't have any specifics about how much progress they're making on Switzerland or Brazil. But yeah, we'll continue to monitor. And if I can find some significant updates, I'll be sure to share it. But I don't want to take too much time away from Liam, but we'll drop some information in the chat that I find useful on these that the public should be aware of.
Perfect. Thanks so much, Ben. Liam, I do want to turn the time over to you. I want to address one more question that came up, asked because I think it's a really good one. Is India moving away from the US geopolitically and more towards China? And if that's a bigger issue. So, Liam, maybe within your remarks, if
Yeah,
that's something that
no,
you could.
that's a good point. And I think on the India question, if you read around it, a lot of people have said, they've sat on the fence for quite a few years rather than sort of lean one way to the US or to China. I mean, they probably in the last few weeks probably tipped the hat a little bit more to China. But as Ben mentions, there's still a lot to be decided on, and that's like the whole tariff piece in general. Yeah, I think back to earlier this year when I was talking around, we held a couple of events and around tariffs and their impacts, and I was thinking back to that, and I was thinking of some of the comments that I made. I got some right and I got some others wrong. I think one of the points that I probably got more wrong, alongside me, many economists, and I'm not an economist, thought that the tariff impact would probably hit harder and quicker than it would. Um, I'd say while business confidence was certainly hit, I think we underestimated the smart folks at US corporates a little. Look, US corporates have seen the impact of tariffs before. If we go to the sort of first Trump presidency, there was obviously a first round of tariffs. A lot of them were kept in place. And then when Biden came in, he actually added to some of those tariffs. And then Trump round two, we've seen a whole new raft of tariffs. So, this isn't something new to US corporates. And, I would say probably this time around, a lot of companies were um, prepared to the extent of the level of tariffs, maybe not, but it's well documented. We saw large corporates and smaller corporates. They stacked and they grew their inventory. They let that sort of build up. They knew these rounds of tariffs were coming. Um, and I would say also another thing that we probably underestimated too was, who would eat the cost of the tariffs. I think I probably expected it more to be passed more onto the consumers. And I would say, look, a lot of the corporates, US corporates, have eaten that cost. But as those inventories sort of start to run down, I think we will start to see that be passed on to the consumers. And if we look at a lot of a lot of financial statements from some of the larger corporates, that's something that they're indicating that, the tariffs are going to start to bite in to, their margins. And I suspect we're going to see some of that being passed on onto the consumer. And when I was speaking to someone recently and they said to me, rather optimistically, that, hey, look, I'm a consumer. I suspect I won't see that cost passed on to me, because when we roll back these tariffs, as a consumer, I probably won't see them. And I was like, okay, well, I don't want to be the one of bearer of bad news, but I think that probably tariffs are here to stay in one form or another for definitely for the short and medium term, and I would probably guess the longer term. If we think of the revenue that the tariffs are now generating, I think it jumped from last year, it was sort of 77 billion, and it sort of jumped to, I think for 11 months, the last 11 months, 195 billion. So that's a tap of revenue that any government would find hard to turn off. So I think that probably they will level out around the 10-15% in the long term. I think there definitely will be exceptions to that. Obviously, China is high now. I suspect if we read the news, it may stay high for a period of time, unless there can be a deal. So that I think they're going to be here for a while. I was reading yesterday, look, one of the reasons that the tariffs were sort of introduced was to help cut the federal deficit. I read yesterday that the federal deficit had come down for the first time in a long time. So I think it was cut by 41 billion. So the US got, that's another reason they would want to hold on to those tariffs, because, they can start to see that US deficit, the federal deficit, come down. Whether that continues or not, it remains to be seen. And the reason I say whether it remains to be seen is because there are costs. If you're a US soybean farmer, okay, and you export some of that to China, okay, the US government are talking about, packages to help farmers. And we saw that first time round with the Trump administration. There was sort of billion-dollar programs to help those farmers who had significant exports to China. So, that's a cost of, to certain industries, they're going to start to see a cost. Ben raised those points. I think there's some big questions out there. Okay, so I think we've got the Supreme Court ruling on IE, so that's going to be coming up. That's going to be a big decision either way. Ben also mentioned the USMCA. Vitally important, because if you look at Canada and Mexico, where most of that trade is still going under that USMCA agreement, so they're shielded from that sort of larger tariff. So that, I believe, the USTR make their recommendations to Congress in January, February, and then they all meet in middle of the year next year. So that's a big one, because obviously US big part of their trade is with Canada and Mexico. So yeah, China, USMCA trading coming up. That's two really, really big points. I guess from JP Morgan, look, I cover corporates that mainly sort of do business overseas, importing or exporting working capital. So, I mean, what have I seen companies do? I've seen lots of different things, to be fair. As I mentioned, look, companies were a little bit used to this. So first time around, we saw a big drive from US companies under the first Trump administration, sort of moving out of China into different markets. So anything but China. This time round, if they'd moved it from China to Vietnam, they were still going to get hit with a tariff, albeit at a lower rate. So we saw that first time round. So this time round, it's companies were like, well, okay, well, we can't sort of really move anywhere else, because wherever we go, we're going to probably get hit with a tariff. A lot of companies are in a wait and see mode, but it is harder for certain companies and industries to move supply chains. So a company I was speaking to recently moved some of their product from China to, I believe it was Indonesia, but they had to move it back because of quality issues. So it's not as easy for certain companies just to move your supply chain from one country to another. There's a lot that goes into it, a lot of cost. And obviously quality is China is renowned now for more quality goods that come out of China. It's not like the China of 10, 20 years ago, where there was a sort of certain stigma about certain products. Other companies have enough margin to still continue with the imports from China. We see another little jewelry company that I was speaking to. These import tariffs prompted them to open up into new markets. So they were importing from Asia all their goods, and going into international markets was something that they wanted to do, and they put it on sort of the back burner. This accelerated that. So they looked at it as an opportunity going. They went into Australia, the UK, and some other markets. The direct sales from Asia to those markets. So effectively avoiding those tariffs. we've seen transshipment. Okay, the concern there is, with respect of, if you look at the imports from China and other countries, you can see other countries' imports sort of rising and China's dropping, and you can see that there's obviously some transshipment there, going from China to Vietnam and other countries in that region. So we've seen a big piece of that happening. Some of the larger corporates, if you think of the Walmarts of the world, they've been able to sort of pass some of that cost on to suppliers. Um, and it's harder for smaller companies to do that. Look, if you're a $20 million company, it's, to have that conversation with a supplier, hey, look, can we split the tariff costs? It's harder to do that if, you're 20 million versus, 20 billion. Okay. So it's tough. I guess, you know, we continue to see sort of clients be just being inventive, on how they're going to do it, thinking sort of more medium to long term. They're here to stay, the tariffs. I had a conversation with a client yesterday. They're importing some large sort of cranes, and they were going to buy them, and then they were going to keep them in a free trade zone, which I believe you've got one in Utah. So their idea was that they were going to keep it there until the talks with China happened to see if they could get them at a lower rate. And when you're in sort of porting cranes that are sort of tens of millions of dollars, those tariffs really add up. So they were, thinking like, how are they going to solve that problem? Delivery sort of next year. Do they keep them in there for a while before they move them? So, yeah, a lot going on. I mean, that's really sort of all I had, just a high level of what I'm seeing. Happy to take any questions, Michelle, if you see any questions there.
Liam, can I jump
Yeah,
in really quick? I
sure.
have a few updates. So first, I'm going to include updates on China, Switzerland, India, Brazil as regular updates on this webinar. As I see, we've gotten these questions a couple of times, and so
Okay.
that may be something that's useful for folks. In terms of where we're at with each and what I've seen, it looks like we're probably closest on a deal or some action with India. India announced that they are now going to stop buying Russian oil very recently, and so those. It looks like there's been no formal action taken to remove that tariff, but on the India side, they've announced that they are not going to continue to buy Russian oil. On Brazil, they're probably the next closest. So they recently, just in the last day, have announced Brazil is requesting the Trump administration reverse the 40% tariff. Again, a request, but they also released a joint statement from the State Department and Brazil that they're having productive talks. So that's something that looks like it's on the cusp of having some action moving forward. As for Switzerland, a lot of what I've seen, not much public in terms of what a deal could look like or much dialogue on those discussions. So as that becomes a little more apparent, we'll be sure to capture that and update on this webinar as well. But Liam, I'm curious, a lot of what we talk about on this webinar is how companies can go on offense, right? And you're in touch with a lot of companies, doing different things. And we just went through some examples. I'm wondering, rather than the situational, what's the best example that you've seen of a company really going on offense, like, making some strategic adjustments to their business? What did they do? What did that look like? Where did you step back in this broader view that you have with JP Morgan? Where did you go, wow, that was amazing?
Yeah,
Maybe not without, you probably sign NDAs and whatnot, but what's
exactly. Yeah, no, that's a really good question. So I'd say that two examples. One was the smaller jewelry company. They weren't a big company, but they were like, okay, well, let's get on the offensive. Let's start selling to different parts of the world, and they really, saw success there. Another company I spoke with, they sourced their basically their product from China. So they had a company in China that wasn't them. It was a separate company. They made this widget, okay? And then obviously the company in the US bought it. Okay, so they had to pay the tariff on the total of the cost. So what they did was they set up a couple of people in China and they started sourcing the materials for the product. Okay, so they were buying the materials that went into making this product. So when they imported that good in, it was at a lesser rate. Okay, so they were looking to do that, and I mean, I spoke with them a couple of months ago, and that was their idea, right? Okay, like how do I get my tariff reduced? Okay, I'm not going to get it reduced on the rate, okay, but I could get it reduced on the total cost of my unit that I'm importing. So they were looking into that. Yeah, and it really is, look, it's when depending on the size of the company, it becomes tougher. Yeah. The smaller you are, it's hard to, move those supply chains. So yeah, I'd say they're probably two of the more innovative ways that I've seen tariffs, and the free trade zones too. That's something that was pretty new to me. In the US, I didn't realize there were so many around the US, but obviously getting those goods in, they sit in the free trade zone. And then once you've made the sale, okay, you then pay the tariff. Obviously, you're not avoiding the tariff, but you're obviously not absorbing it straight away. Okay.
And that's a great plug for our foreign trade zone.
Yeah.
World Trade Center Utah manages Utah's foreign trade zone, and so if you're a company and interested in it, reach out to us. We're happy to
Yeah.
talk about if that makes sense for your operations.
Absolutely. I was just putting something in the chat, but I think it may have not gone to everybody. So Rand's going to help send that out to everyone. But just given the questions that have come up about India, I just wanted to let folks know this is coming up really fast, so probably doesn't make sense. But in a couple of weeks, we are leading a business trip to India with focuses on aerospace, manufacturing, and life sciences. There are a number of Utah businesses, along with some government officials, that are part of this trip. The entire trip is 2 weeks, but many companies are only joining for 1 week or the other. So if that is something that could be of interest, let us know right away. We might be able to squeeze you into that. Thanks for that, Rand. So you should be able to see the link to that trip in the chat now. Any final questions before we wrap up? All right, well, thank you, everybody. We do have some great speakers lined up for next week, but also November 7th, right after those court cases, and then the 14th after things change with China. So lots more really great stuff to come on these. It's not hard to find topics to talk about on these webinars every single week. So we appreciate you joining us. If there are other things that we can do to support you, please feel free to reach out. One thing I did want to say, Liam was mentioning that jewelry company that was diversifying where they were selling. Just so you know, that is one of the main things that we do as an organization. We have a team that works with companies one-on-one to figure out what other markets in the world might make sense for them to break into. And that's something we've always done, like outside of tariffs. We've just helped companies grow internationally. But right now, an even bigger need for that. So if that's something you're looking at, again, please feel free to reach out to us anytime. Hope everyone has a great weekend.